Oh, we have a show tonight. Show today. It feels like tonight. Feels like because Danny's back in studio, it feels like an event. There's a lot going on, stock nerds and market lovers. Welcome to another Sugar Money Radio. Tim Reazor, Danny Stewart, Guns Catudas, Hunter.
Alex Catudas, Hunter Mozingo.
Yeah, no, Hunter Mozingo and Don Vandenbord, all with you. We're all back. Zach, our illustrious producer, is with us too. And so listen. Markets are changing, and I've got some thoughts on the changing market. But I want to just, before I get to some other things I want to talk about, I want to offer up this screen, and it's get it over here real quick. Let me see if I can pull it up and get organized. So this is an 821 cross screen. This little tiny box. I'll make it a little bit bigger. I'll send it to you, stock nerds and market lovers. So what I'm looking at here is a screen of stocks that I just ran right before the show started, where the 8 exponential moving average is accelerating through the 21 exponential moving average. And because of what happened in today's jobs report, you're going to want to get a handle on the changing market. So what you're going to see is the markets, I don't believe, are going to trade. I could be wrong, right? The markets could just collapse. The earth opens up and swallows up J. Powell, which might not be a bad thing after we get done with today's show. But I think what you're going to see is levitating markets and the continuous churn underneath them, right? And so you want to be on top of that right now. I'm going to mute myself, Zach, as I've got.
Are you about to cough, Tim? Did you want me to cover for you?
Did I do it? Can you still hear me?
Nobody will ever
did that
know.
work? Yeah. Nobody will know you had
So as long as I executed the button properly, there's a foot pedal underneath the desk that I hit once for cough, and I forget to turn it back on.
Yeah.
Hit it twice. Okay.
I think you got it.
So this screen of stocks, now not an end-all to be-all, will show you acceleration on the 8 and 21. More than happy to send it to you. I could do it in one of two ways. If you have to think or swim, I can just send you the screen, right? Just email it to you. Email me, tim@revereasset.com, and I'll send you the screen. If you say, Tim, I trade on Schwab, I trade on Robinhood, I trade somewhere else. Perfect. I'll download it into a spreadsheet, Google Sheets, Excel, whatever you want. You let me know, and I'll send it to you. But more importantly, I've got something. Zach, pay attention. Zach, you drink coffee, right?
I do.
I know. No one else on the show. Danny, you drink coffee.
Oh, my gosh. I brought back pounds of coffee.
Pounds.
3.5 pounds to be exact.
Pounds of coffee.
I had to split it up between 3 different suitcases,
Danny,
so I didn't go over the 50.
What you don't know is Danny went to Albuquerque for his vacation.
Albuquerque.
And he went to the Safeway and he just saw coffee.
Yep.
Brought back pounds.
Load up those beans.
So here's the thing, stock nerds and market lovers. Can you see my phone? Can you see my phone?
Who is that, John Cena?
No, that is not John Cena. That is Man Campbell. That is Man Campbell, otherwise known as Dan Campbell, the head coach of the Detroit. Are there Lions in Detroit? I don't know, but the NFL has a team there called Detroit, the Detroit Lions. If you were French, you'd be like the Detroit Lions. And so, which I am not French. So the Detroit Lions, Axel Foley's. That's Eddie Murphy, Danny.
Yes.
Detroit Lions.
Yes.
He wore a Detroit Lions jacket in Beverly Hills Cop.
Yeah.
Yeah.
Mm-hmm.
Just throwing that out there for you. So anyway, Man Campbell. This dude, if you've ever listened to Dan Campbell, you will walk away calling him Man Campbell. Sounds like a man. Like he's got. This dude is football dude. Like he's like if you were to draw football guy, American football guy. If you were to draw European football guy, he'd be on the ground, flopping like LeBron. So Man Campbell. I'm going to read now. We've got 2
Flopping
audiences.
like LeBron. That'll be a song.
Flopping like LeBron.
Yeah, that'll be like a title of a song.
What you doing on the floor there, Remy? Flopping like LeBron. Throwing a tantrum. Here we go. I'm going to read it, but I know we've got 2 audiences. We've got the podcast audience that listens on iTunes, Google Play Store. By the way, our podcast is delivered where you want it on your device, when you want it. Google Play, Apple iTunes Store. You can get it. Subscribe, please. Or we've got the YouTube audience, right? Mm-hmm. Which I'll get into in a little bit here. We've got the YouTube audience. And so they're just listening, and then we've got visual. So I'm going to show you the visual, then I'm going to play the audio. So here it is, right? You can see it. You've seen my screen. Pause the video right now if you want to just. I'll read it to you.
Looks like a very masculine man.
Oh, this dude wakes up and he goes out and kills his dinner.
Right.
He could go to the same store. Danny got his pounds of coffee, but he goes out and he slays his dinner. Dan Cambpell is a big coffee guy. His Starbucks, let me just clear my screen here. Oh, his Starbucks order. This is his Starbucks order. 2 ventis of Pike Brew. This is venti. So you'll see me oftentimes drinking coffee on the show because I stopped at the Starbucks right before we come on studio and I get a coffee. It's a venti. This is a venti. Man Campbell drinks 2 ventis of Pike Brew with 2 shots of espresso in each. That is known as a black eye. So red eye is 1 shot of espresso in your cup. Black eye is 2. Big football guy, big coffee guy. Now I want you to just hear what a man sounds like. I'm going to put this on my microphone. This is what a man sounds like. Danny, you should aspire to this. Now I'm looking at your chest hair, Danny. Danny has the chest hair of a man popping out of his shirt. Can we see Danny's chest hair? That is impressive. Gosh, I'm looking at that thing, and it's like, whoa.
Herculean.
78.
Olympians,
1978,
right.
1979 call. They want that back. But listen, you go with it. That is what a man. Okay, so
I don't manscape or whatever that's called.
You might want to look into
that. I think you're all right.
Listen to Hunter. Oh man,
I'm so ashamed of
that's a rabbit hole we should avoid. Manscaping.
That's on the next episode of Your Money. Danny's manscaping routine.
I can almost hear people unsubscribing.
And how long does it take? Okay, here we go. This is what a man sounds like.
Here it is.
I'll get 2 venti. I go to, Starbucks. I get 2 venti of the pipe with 2 shots. Black eye in both. That's what I come in with. That's how I start the day. So
we'll do it one more time.
Normally what I do is I'll get 2 venti. I go to, Starbucks. I get 2 venti of the pipe with 2 shots in them. So black eye in both. That's what I come in with. That's how I start the day. So
we got to talk about this. That's what I want to get to. Can you die from this? Like, is he ready to just die at any moment?
Yeah.
Well, I'm guessing he weighs like 285 pounds, so he's like double.
What is that?
Take double the caffeine.
No, is there a ratio? Like,
oh sure, I'm sure there is.
That's with anything.
It's like alcohol or anything else. Yeah.
So
the bigger you are, the more you could process.
Right.
Well, somebody said that's the equivalent of 10 Red Bulls.
Is that possible?
That's,
Wow.
That's probably accurate.
If somebody said that's 10 Red Bulls, then that doesn't seem healthy. Like,
that's
got to be a Surgeon General's warning on Red Bull. Like, hey, how many Red Bulls you drink a day? Oh,
15.
10. Yeah, like if you're drinking 10 Red Bulls, is that the equivalent to smoking 2 packs a day?
Man.
Like,
I got a good one for you on that. So, do you guys know who John Daly is, the golfer?
Yes, I know John Daly. Everybody knows who John Daly is.
So they interviewed him one time. What's your pregame routine, John Daly? He goes, well, I smoke about almost 2 packs of cigarettes and I have 15 Diet Cokes before I get on the course.
Insane.
That was that your John Daly routine? Like that?
Yeah.
That's all right.
His mullet was fantastic.
John Daly's a legend.
He is a legend. So, look, Stockton to Marcos. I meant no. You're fine. Way to take. Like the show goes off the rails purposely, but when you just
bring it back down,
you're like Tiger Woods driving it into a crevasse.
Also likely the best. Alex also likely the best golfer.
Oh yeah. We were talking about Alex's. Alex, you a scratch golfer?
No. Oh my gosh. If I said that and my father watches the show, he would call me up like, "What are you talking about?"
Wait a minute. Wait, hold on. Pause there. If I said that,
and my father,
I got confused. Does your father watch the show?
Yes.
Oh, he does. Okay, because you said if my father watches the show. I thought you said
no,
if. But I'm like,
saying if he caught this part of me saying I was a scratch golfer, he would be like,
"Oh,
no way."
Well, what's your dad's name?
Jim.
Jim Katunis. That doesn't sound very Greek. I get Alexander Katunis, but Jim Katunis.
Let's talk about Jim. Does Jim participate in Arm Day like you do?
He used to. He was a good athlete when he growing up.
Whoa! Now we're down a rabbit hole. So Jim used to be a good athlete. Now I'm taking offense on Jim's behalf. Let's talk about how you. Did you just call your dad a has-been? That is all I heard.
No way.
Yeah, because I'll tell you what. Learn from Hunter. Me mommy has never been insulted on this show. No matter how hard I have tried to get Hunter to do it, he knows the line. And me mommy, by the way, I get emails from me mommy, which I no joking. I do thoroughly enjoy them. Me mommy is on the Twitter.
Yep.
And she'll direct message. I know she direct messages on occasionally. Is Jim on the Twitter, Alex?
No, he's not on Twitter, but he watches us through the YouTube.
Through the YouTube.
Where is Jim located at in this great country of ours?
He lives in New Jersey.
Oh, is he an Eagles fan?
No.
He lives in New Jersey. He lives in New Jersey.
Hold on. There's two New Jerseys. There's Northern Jersey.
No,
and Southern Jersey.
Yeah.
There's two New Jerseys. Yeah,
no,
that's
he
all.
wasn't. South Jersey's a lot of Eagles fans.
South Jersey is nothing but Eagles fans.
Oh,
yeah.
So, by the way, until Tom Kean, governor of New Jersey back in the early 80s, right? There was like a succession going to happen in Jersey between South Jersey and Northern, two completely different areas of the world. Anyway, so this whole market is shifting. And I'm telling you, the shift came out last night. So we tape the show Friday, Stock Nerds and Market Lovers. It's Friday afternoon. And last night at 6:18 p.m. Central Time, 7:18 East Coast. Who the hell knows where Alex is? It's like that time zone that doesn't exist. Now, Alex is on Pacific time right now, I believe. And so
Arizona.
Mountain Standard.
Well, no, what time is it there right now? I think you're 2 hours.
Right now we're the same, but we never change our clock. So when California changes, we actually gain an hour on them.
Arizona, huh?
What the hell time is it where you are? Now I'm confused. Dude, you literally just confused me. Tell me it's
slow it down for
it's
9:25
here, so we're 3 hours behind East Coast.
2 hours behind us, which is central.
Yeah, which is
So right now you are in
so
California.
you're like the Pacific
Right now,
time zone right now.
Yeah.
But not all the year.
So Mountain Standard equals Pacific Daylight.
There you go. Don wrote it in equation form.
Somebody turned the oven on and get the gas going. I'm going to put my head in there.
Not always comes in with the mic drops.
So Joe Manchin. Joe Manchin is the president of this country. Okay? So let me explain. Joe Manchin, West Virginia senator, esteemed West Virginian senator, used to be the governor of West Virginia. Joe Manchin is running policy in this country. And so Thursday night, 6:18 p.m. Central, he sends this out. And the moment I saw this, I'm like, this is the tweet. This is how the markets are going to shift. And you're like, Tim, what the hell are you talking about? S&Ps? You can see them on my screen. They're up 8 points. No big deal here. It's this. Let's look and see what the old what are the NQs doing right now. So the NQs are down just 0.5%. No big deal, right? These are hourly charts. Kind of watching as the market day goes on here. Joe Manchin, I'm urging Fed Chair Jerome Powell and the Federal Open Market Committee. That's like
FOMC.
Yeah, that's like Martha and the Vandellas or something. Yeah, like Jerome Powell and the Fed Open Market Committee, right? George Thorogood and the Delaware Destroyers.
Jerome and the FOMC.
Yes. I'm urging Jerome Powell. Like, you can tell Joe Manchin doesn't know what the hell he's talking about here because he spelled out FOM's like, not from here. Joe walked into a Fed bar, like the cowboy doors swing open, and he's dressed like, anyway, he doesn't fit in here. I'm urging.
Dressed like Danny.
Man, I didn't say it.
Wow,
I'm urging Fed Chair Jerome Powell and the FOMC, like, just in case, the Federal Open Market Committee, and all they did was confuse anybody reading the tweet because nobody knows what the hell FOMC is, to immediately reassess America's stance on monetary policy and begin to taper. This is how he's saying this.
You read it just like that?
That's how he sounds. Yeah. And to begin to taper the Fed's ongoing stimulus in order to avoid he meant to say, did he mean to say saddling? Because to avoid saddling. What is saddling? Like saddling like a cat? Like
burdening.
I think he should have
like
burdening. Yes. Yeah. To avoid saddling Americans with inflation, taxes, and overheating our economy. Now, he sent this out. Interestingly enough, he sent this out Thursday. And then I want to show you the TNX. The TNX, which we all know, Daniel, as the 10-year Treasury Index. 10-year Treasury Index has been in the hopper. By the hopper, I mean the toilet. And by the toilet, I mean the flusher. it's been going down. Like if yields,
The rates.
if yields on the rates are going down so low that it's thought that maybe there's not so much growth left in the old economy, right?
Yes.
Could be. It could be.
Could be.
Or Danny's
Or the
about to
Fed's
say,
buying bonds, one of the two.
Danny, Black Hat Danny, can we add caricatures to the show, Zach, where you just throw like a black hat on Danny, like just produce the show that, like or a tinfoil hat or whatever.
A helicopter on my head.
Like something, right?
There is a function for that. I think,
okay, let's figure that out for the coming weeks. Sure. So anyway, 10-year Treasury index is in the.
But those aren't mutually exclusive.
What?
The Fed could be buying bonds because they think the economy's slowing.
No, they're not. And I was going to say that before you just outed yourself as being very skeptical. Okay.
Fiscal, right?
Fiscal. So here's what I want to. So just like yesterday on Wednesday, the 10-year Treasury yield for 1.18. That took us down to early February, late January levels of this year, right before the big expansionary trade took off. Okay. And if you remember that rotation meant we're buying Caterpillar, we're buying banks, we're buying anything that makes anything. And we're not buying tech. We're not buying tech. Tech's about to roll over. But because we're not Clio, we don't know that. In the year 2000, you know who Clio is? Mistress. Is it Mistress? No, Miss Clio. I don't think she was a mistress. I think she was Miss Clio. By the way, did not see her own death coming.
She was TV psychic.
TV
Miss
psychic.
Clio, right?
Miss Clio, yeah.
Yep, I remember.
Yeah, that's why we do the show. So Miss for this. So Miss Clio doesn't predict that you don't buy. You don't buy tech, right? So Joe Manchin, I think Joe Manchin saw the numbers. Like Joe Manchin isn't this. I mean, I'm not saying he's dumb, but I'm also saying he's not this smart. Like I'm saying, Joe Manchin saw the employment numbers, and somebody close to him said, "This is going to cause rates to go up." Rates are up. Yields are up over 6% today. Do you realize in bond world?
0.6%.
No, 6%.
Oh, 6%
Yeah, yields are up today, 6%. Do you realize how big of a move that is in bond land? That would be like the Dallas Cowboys coming back to win a Super Bowl. That's how big this is.
5-1.
5-1. So this is a really.
For those of you who don't know, that's 5 Super Bowls the Cowboys won. Well, we got new listeners all the time. They don't.
We
know
do
the
get
inside
new
joke.
listeners. So this is such a seismic move in yield, and so now I think what you're going to have is Joe Manchin, who I'm not joking, stock nerds and market lovers. Joe Manchin is running policy. This is a apolitical show where I try to drive the train that way, because even though money and politics intersect all the time, and it's not that I'm ignorant to that, it's just that your politic will keep you from seeing the true picture of the markets. And our aim here is to present you with the true picture of the market so you can help yourself make as much money as possible. And then times of tumult or strife, you're able to turtle up and save yourself money.
No matter who's in.
Right. It doesn't matter who's in office or what affiliation you are. Like, we have an obligation to do right by our listenership and our clients. So the TNX here up over 6% today, almost 6.5% as I'm talking. It keeps going. I think Manchin knew these numbers. I think he knows what the result was going to be. And I think now, because Jay Powell is, I don't know if it's up for review. Jay Powell has a chance to reapply for his job this fall. And Joe Manchin is on the Senate committee. Like, Joe Manchin runs the Senate. Joe Manchin runs this country. If anything that Joe Biden hopes to get through, policy-wise, it's going through Joe Manchin.
Right.
Joe Manchin is the voice of reason. There's a whole bunch of reasons why I've come up with this conclusion. I'm not alone, by the way. I'm not alone in this thought. And so if Joe Manchin wants rates, if Joe Manchin wants relief from inflation, and he thinks it's done by raising rates, Joe Manchin's and Jay Powell doesn't want to be fired from his job. Nobody wants to be fired. Like, I don't care what Jay Powell says on the podium. Nobody wants to be fired, okay? He's not going to go to war with Joe Manchin, okay? So now let's just take a look at what's leading to that. Okay, this is one day. One day does not make a market.
Mm-hmm.
But let's just start with, let's get this on a daily chart. Let's get this on a daily chart, and let's look at like KRV. Yeah, like these kind of rebounds. And let me get it off the charts with the moving averages. And by the way, stock news market lovers, if you're new to my charts, right, the green line here is an 8 exponential moving average. The 5 right there is that purple line, 21, or the mean, as I'll often call it, is right there. Those are all exponential. The blue line here, exponential as well, 34. The red line down here is a 50 days. Gold all the way down here, 200. Simple. So now, these are big moves. Okay, so this is the KRE. KRE is up over 3%. But I want to get it off of these moving average lines charts because these are just lines on the charts. But oftentimes people see these lines on the chart and they'll think price has to stop there. And oftentimes it's true. It's because of how algorithms are written. But let's take a look at it on an average true range chart, which I think gives you a better assessment of what's moving. My bread and butter setup, so is I love the 821 cross, the screen that I started, how I did the show with. I love a 521 cross, right? I love that too. You can do a 5-8 cross. Yeah, the bottom line is you want to understand where momentum is shifting to. That'll tell you, that'll ferret out the stocks that are moving. And then if those stocks are moving, then you can start to get a preponderance of evidence. And when you start seeing the regional banks and you start seeing the JPM up almost 3%, like you're going to start seeing what's really shifting here. So in this environment, which I believe is about to take hold, it doesn't have to. What I'm saying here does not have to come to fruition, Dan. But are we setting up for February part due? Maybe. And so, Hunter, give me a couple agriculture stocks. Anyone. Just we'll play the game. Give me a couple
agriculture.
Yeah.
NTR. Nutrient.
NTR. November Tango Romeo.
Yep.
NTR up 1.65% today. And you're like, well, Tim, that's not a really good looking chart. And they've got earnings coming up here, but it appears. But you're looking for the shifting trend. What you don't want to be is holding the back, right? Because that's what happened in February. Tech shifted, and then before you knew it, Bob's your uncle, and the Caterpillar now it's come back a little bit. Deere, let's look at Deere up 0.88%. What are the steels doing to the STLD? Those are expansionary, up 2.5%. X, which is not as good as STLD, up 3.14%. Give me another ag, Hunter.
SQM or MOS. I don't know. Both of those look pretty similar to what you already looked at.
This is a setup right here. So why is that? You just looked at a bunch of charts. This is where I think this is your point of least risk to buy. Here is the mean. And by the way, we're going to get Don, Hunter, Alex. We're going to get all their commentary on what I'm saying. Here is the mean. You're not extended. So the average true range charts give you an opportunity to visually see overbought and oversold. It's important that you understand this because if you're going to buy something, like let's use something completely out of the realm of what we're talking about. I'm going to type in Penn. Penn reported earnings yesterday. It's in the news. But like if you want to see what overbought looks like, it's Penn. And it doesn't matter that it's Penn. It could be any company. But when you hit the third ATR, you're typically, and it doesn't mean you can't run like in here. You up your stops. That's how you handle those situations. Your propensity to pull back is exponentially higher every time that you get above the mean. So if you're 1 ATR, average true range measured over 21 periods, 21 trading sessions, and then you go 2, and you just multiply that by 2, you're extended above the mean a little bit. What if you go 3? Well, now you're really extended. That is a visual representation of overbought. And you typically want to avoid overbought. It doesn't mean that they can't go up. I mean, look at Chipotle. Like, look at that run after earnings. Yeah, that it doesn't mean it can't go higher, but now it's starting to come off. Third ATR. Is that because their input costs are going to go up? Rates are going higher, input costs go higher. This all kind of works in a symbiotic fashion. And so you want to be able to understand that. And so when I'm looking now at like banks or so back to the day, real quick. So why is Mosaic? Because Mosaic is right around the mean. It's right around this 21. Does it mean that Mosaic is going to go higher? Nope, it does not. But if you're looking for lower risk entries, you're going to know right away you're wrong when you start closing below that first level ATR. That's as simple as I can make it. Is there more nuance to it? Absolutely. Do you want more nuance? You can call 855-732-5932. You can email to revereasset.com. Email anybody here. By the way, hi, Meryl. Meryl. Was Meryl on the website last week?
Yeah.
Oh, yeah. Yeah, I think she was. That is our newest team member, Meryl. Notice no salespeople. We're all here to strategically help you, whether you're a client or not. We're here to help you get better. So look, this market's shifting. What is it not doing? It's showing you where the weakness is. It's housing, right? Like here's DHI. Tried to make a push, couldn't get back. Think about it. Rates are going lower, right? Previously, pardon me. Previously, rates are going. They're going lower. 10 years been drifting lower. 30 years been drifting lower. Mortgage rates at lows, but not at last year's lows, but low. And housing couldn't get back to recent highs. Like that. That's kind of like a tell, right? Like look at Toll Brothers. Look at DHI. Look at Lennar.
I disagree completely. I think housing looks fine. They've had big relative strength over the last 3 weeks, and they're putting in handles. And if they break above this week's high, it looks great. Look at ITB.
I'm looking at it right now. I think that we're not going to debate it because that doesn't help anybody. We can debate it. I'm sorry, Don. I don't mean to, I'm not shutting down debate. I'm saying I could be very wrong, and Don could be very right. But I think that if these rates continue higher, my hypothesis is if these rates continue higher, and Joe Manchin, who's now setting policy, which is what I believe,
right?
That the stocks that are rate sensitive, you have to know how they react.
Would get hurt.
Well, no. Rate sensitive is banks, which are great.
Well, I would meant negative to rate sensitive.
Understood. Yeah.
If rates rise enough, you're gonna people will not be able to afford mortgages as much. Some people on the fringe, mortgage refinancing will slow down.
Yep. And it's not that that mortgage rate is going to skyrocket. No, it's all relative. Like if I said mortgage rates, whatever the 30 years trading at right now, right? Whatever a mortgage is right now, compared to 1982, it's low, and it's all based on who's in the market.
But you're also borrowing a lot more now because those low rates have driven up real estate prices so high.
Yes,
you're paying less interest rate, but you're borrowing twice as much.
And so but here's the thing: there's less people who experienced 1977, 1982 mortgage rates in the height of the interest rate crisis, just double-digit mortgages, right? Like 15, 17%, right? There's more people who have seen nothing but nothing seen rates drift lower over the course of their lifetime coming into the housing market.
Right.
Like there's a shifting, there's a cultural shift coming on. And so rates going back to, what were the rates in 2007, 2008? They were like 7%, 6%, 7%.
That's called normal, and
that's what I'm saying.
By historical terms,
back in that time, you were told that they are historically low rates. Right. At like leading up to the housing crisis, historically low rates, and then who was it? Bernanke that raised rates 15 mother effing times in a row. What a huge mistake! And that guy had the gall to write a book. Dude raised rates 15 times in a row.
He learned from the master, Bubbles Greenspan.
Jesus. 15 times in a row. Anyway.
The student becomes the master.
So, I applaud Jay Powell but it's all relative. You're never's a strong word. If we see 7%, 6%, hell, I'll go 5% mortgages ever again, we're probably screwed, right?
Well, forget about the mortgages and forget about the mortgage paper. Do you know what bonds will do? Bonds will lose, if rates go to 5% from where they are now,
right?
Bonds will lose 40% of their value.
Pause. Great point. Pause. Let's show people the graphical representation of that. So the representation of stock owners market levels, if bond prices are decreasing, yields are going higher. If yields are going lower, so we'll just put in TLT. And you can see TLTs, this is a big move for TLT, down 1.62% today.
And that's a big move for bonds.
Yeah, this yield jump is a big. That's what catches. Like, I think Joe Manchin saw these numbers. That tweet could have been sent out anytime over the last 3 or 4 months. He sent it out yesterday. He clearly had gotten a tip off on these numbers, right? And he's getting ahead of it. He's saying do something, and maybe the market itself is going to do something, right? The market itself, even if Jay Powell tapers his bond purchases, that will give less demand. Price goes down. It'll drive rates up. Mm-hmm. So Jay Powell doesn't have to enact.
Oh, they don't have to even be vocal about it. They can behind the scenes drain the excess reserves out of the economy.
Right. And so it's interesting because when you look at this is the poster child now for inflation, right? Lumber. Like, lumber was the poster child. Lumber prices are going higher. Lumber is in the red. We've covered this extensively. Lumber opened up at 709. I'll show you right here. I'm going to get my cursor. This is the beginning of the year. Yeah, this is insane, and we can talk about this a little bit in a moment. So what I'm looking at when I say it opened for the year, this is the number I want you to look at when I put my cursor back. That O stands for open. So now we'll come over here, and you can see it says opened at 8 on 710. So in the beginning of the year, it was trading around 710. Went all the way up, if you can see that, went all the way up over here, my friends, to $1,711. Now currently trading at $490. But you're not seeing any lumber price breaks at the home. I know. I don't have a chart for this. But when you want to go buy the stuff they make houses with, like OSB, which is flake board, your lumber sticks, the 2x4s, the 2x6s, the OSB, it's not coming down in price.
They're not going to bring prices down until the economy slows or they stop giving people money.
You hit, I think, the first part of what you said there. The only way a Home Depot, that's where that's where most people get their lumber. And I'm just most normal people, not in the business, get their lumber from. You're not going to see prices come down. They have to find a way to make up the wage gap. I'm telling you that I think the example that rings true is the Starbucks example. When coffee, which is KC, let's see if I can measure. They won't let me measure coffee anymore in Thinkorswim. If coffee, Alex, can you pull me up a coffee price if you have a ticker or a chart? Joe is the
JO is
JO. Thank you, Joe, which just apparently ran up there recently. When they get a price break on coffee, Starbucks doesn't lower the price. That like Target just yesterday. Target said, we're going to not only pay for college tuition, we're going to pay for your books. Competition is so stiff out there for employees, like to get employees. This is an employee market. It's if you're a person who wants to work, this is a fantastic opportunity, right? To go work at Target, have your college education paid for, and your books paid for. That's honestly that's a good job. And so if you're younger and you don't have to burden yourself with school debt and whatnot, where is Target going to make that up at? Where in the razor thin margin is Target going to make that? Which, they sell a bunch of groceries, they sell a bunch of sundries. They have to make it up somewhere. So if prices on raw materials come down and Target gets price breaks from their suppliers, do you think they're going to really pass that savings on to you? I don't think so. I think that what prices are, it's here. And the only thing that's going to bring prices down, Dan, now is a slowing of the economy. And so, which got me thinking of what is, Tim? Tim, tell me factually, give me something about the inflation rate right now. But before I do, I think it's important to understand contextually where we are with inflation, okay? And I want to do that. But before I do that, while you were gone, while you were gone. Zach was here.
I was here.
Yeah, while
Can
you were
confirm.
gone. I closed the deal. I got a phone call, and I closed the deal, and we now have our first sponsor.
And you what?
We have our first sponsor. We've been doing this show in some form, Danny and I and Don, since 2014. We've never had a sponsor.
Yep.
Because sponsors want things, right?
Well, then it becomes biased, yes.
Yeah, or people who want. The reason why we don't have guest stock nerds and market lovers, one, because it's my voice. Everybody loves me. But
Sound good.
thank you. It's more, they want to sell you something. And they want to pump a book, they want to pump their fund, they want to, and we can, instead of just selling you, let's just give you information that you can use to make yourself money or save yourself money. And the whole business model that we built the firm upon is give away the information for free. If they get too busy, if they want help, if it becomes overwhelming, or they have friends and family that need help, they'll remember who we are. And it's amazing how that works, right? Goodwill. Amazing writing down on a piece of paper, oh yeah, our business model is goodwill. It is actually just treating people amazingly, telling them the truth, whether it's good or not, like whether I have no love for the industry, as Danny knows. And Danny doesn't either. I don't think Danny's allegiance is to the people, not to the industry. And that's a big difference from our shop, with Hunter, Alex, Don. They all have the same mindset. Our allegiance is to you, not this big machine that keeps driving fees and
Not the firm. Yeah.
not the firm, man. And so when you put your trust and faith and love in people, it's amazing how what a deep following you can get. And with that, Danny, that's why we were able to get a sponsor.
You wouldn't believe it.
You wouldn't believe it.
I'm a little nervous now.
Don't be. I saw
no.
Danny. Someone's paid us for airtime.
This is a big deal.
It's a huge deal.
Big day.
Do we have like a drum roll? I don't think so.
I know.
I doubt it. I'm going to put my sponsor voice on.
I would have had a drum roll if you told me.
I
No,
should
we
have had one
purposely
ready to
don't
go.
tell. Danny,
That's my
stock
bad.
nerds and market lovers. Danny has his sound machine.
I got this
And
little sound machine. I love it.
We need to get that on the show one week. Really.
One day.
Yeah.
One day. Just like we're going
For one special episode.
Just like
we'll
Don's
feature
idea
this.
of putting Meryl on the show one day, a day in the life of working with Danny.
Sure.
Yeah.
She'd be good.
I know. We all discussed it. Did you listen to last week's show?
No.
Oh.
I was on vacation.
Whoa.
I haven't listened to it yet.
Can we discuss that for a second?
You
No,
sat in an
no.
airport for 12 hours yesterday. You couldn't listen to the show.
I was in line.
12 hours?
It was bad coming home.
And now, Danny, this
Well,
show.
let's keep going. Who's the sponsor?
This show-
Let's not go off the rails.
This show is a vacation for people's ears. For an
That's right.
hour and 10 minutes every week, we give them an ear
It
vacation.
wasn't as much as a vacation last week. I wasn't here.
Are you ready?
Yes.
Yes.
This segment has been brought to you. Is that a good announcer voice?
That's
Yeah.
great.
You like that?
Solid.
Let me try one.
Yeah. Good drink.
Clear his throat.
Yeah, I want to.
Clear the palate.
Okay.
The whole audience is.
This segment of Your Money Radio has been brought to you by Danny's Spice Rub.
Hey!
If your yes, Danny's Spice Rub. If your meat could rub, it would want to meet Danny of Danny's Spice Rubs. Rubbing things the right way since 2014. Good on vegetables too. Danny's Spice Rubs. Back to the show.
Wow.
Good. Danny, Tim told us about the spice rubs. And it seems like a great practice. So, hey, it's cool you guys do that.
My rub.
Danny, I
was
can't believe you
awesome.
didn't listen to the show
It
last
was-
week.
I promise it was all glowing. I promise. It was.
No,
it was-
I got.
yeah.
I had people. First off, I had. We have a friend. She's in New Jersey, by the way. A mutual friend who tweeted at me how I used the word kvetch intermixed with talking about your spice rub. You actually now you're gonna get made fun of. You actually liked the tweet that she was
all right.
that she was referring to, and you still didn't listen to the show.
That's correct.
Well, like it's engagement. It's engagement.
So here's the thing, Danny. It might have been 20, 30 minutes on just your spice rub in Christmas
It
time,
was like 15 minutes.
probably. And so
now I'm going to have to go listen to the show. It was a while. Tim just did that because he knows now I'll have to go listen to the show.
Right.
Yeah, right. No, it was all spur of the moment. Right on the heels, Danny, of what's your favorite donut in Mount Rushmore?
Mount Rushmore fast food.
Yes, Danny. All an elaborate ruse to get you to listen to the show. So, and by the way, Stockners, if you want to find that episode, you just go to podcast, right, at Revere Asset. And then you want to go to what's Robin Hood's Long Game?
Good episode.
Very good episode.
Yeah.
So, Danny, if you don't know, Danny makes a spice rub. But listen, here's what I'm going to do. We're going to get into...
it's a dry rub. Dry rub for smoking meats and cooking and barbecue.
I got to get some of this
By
stuff.
the way, how can people
I just want to make sure when you say spice rub, people might think it's
for
like
sure. Like a marinade?
Like a spice tea.
Marinade infers wet. Spice rub infers dry.
It's a dry rub. Yeah.
Dry rub, for sure.
Right.
What's a wet rub? A marinade.
How do people get the spice rub?
Well, that's the thing.
That's the ticket.
So what I want to do right now, by the way, can someone remind me of what I was going to do before I went to the ad copy read? Because I actually genuinely
Do you know how many people I
No
have
idea.
calling me up asking me for that?
talked about it all last week. There's a lot of people. There's a lot of people that call you for your rub.
That's right.
So here's the thing, stock nerds and market lovers. This is the Revere Asset YouTube page. Okay, we're going to get better at creating content just for YouTube. Alex's video, This Stock Could Rock, right here, is part of the original content plan. We're going to get way more organized. Under playlist, eventually, we're going to have all the classes I've ever done, all the classes, the lunch and learns that Don's ever done. We're going to put them there. We're going to organize them. That's where you can find all the podcasts. It'll be a very organized.
We're going to become organized.
Yes,
That's right.
central place.
Imagine that.
But here's the thing, stock nerds marketers. I'm going to give you a couple ways to win here. And I'm going to put Danny on the spot. All you can do, Danny, is say yes.
Gosh.
Here it comes.
Yeah, all you can do is say yes, Daniel. If you're a stock nerd or market lover.
So I can't say no or maybe. It's just a yes.
Just yes.
It's not a decision. Yeah. You
Yes,
just say,
we can
Got
actually,
it. Got it. I just want to
probably
be clear.
Probably to shut his microphone off now. And so I might want to just go to that step. Here's the thing, stock nerds and market lovers. We need your help. So as we continue to grow and evolve, we want to do it with you. Really, Daniel.
He's got his headphones.
He's
plugged
on
in.
I forgot to put my phone on mute.
He's
Sorry
on
about
vacation.
that.
So here's
That was Joe Manchin. He wanted
Somebody
some advice.
calling. Want that space rub?
They
Yeah,
want-
Joe
No, that
Manchin
was Joe
calling in the
Manchin,
show.
Don. He was
So,
calling for
hello.
some advice about
We're going to
rates.
send you some spice
And
rub.
dry rub.
And he wanted some rub, yeah.
We're going to send you some of Danny's spice rub if you do a couple things for us. One, just one, and it's going to be on the honor system. Okay, if you're listening to this show, forward one of our videos, one of our podcasts to somebody you think it would benefit. Okay, and then would you go in to our YouTube page, subscribe, and leave one comment on any video?
One good comment.
Well, I mean,
Any comment,
yeah.
any comment.
Really,
Like,
I was being
Watch out. You might even like our content.
yeah.
Imagine that.
Maybe if they forward it to Danny, he'll listen to it.
Yes.
Yes.
If you do that and you email Dan at Revere Asset, or you can call 855-732, we will send you some spice rub. We'll send it to him. We'll mail it to him. We will. We talked about with Danny. We went through the whole postage, everything. What we'll do is in a little package, we will send you some spice rub from your friends here at Revere, and we are going to build the next leg of our business on you. Like, I'm going to grow this YouTube page with your spice rub. That is my absolute goal here.
The rocket fuel we need.
Yeah. So if everyone listening, whether you want the
Registered investment advisor / spice rub.
That's right. Spice rub enthusiast.
I don't think meat rubber is the way to go there. I think spice rub.
No.
I'm just thinking what kind of logo we could put on the bags for.
I know, right?
Like a picture of Danny holding.
It's already got the
peppers
chili
and-
peppers.
Well,
I already
yeah,
got.
I think so.
Yeah.
Because we don't want the Revere Asset horse on there because they'll think it's spice rub for horse meat, and I don't want that.
Yes, no, that's no.
That's
good.
not good.
Not that it
Yeah,
couldn't
yeah,
be.
no, I agree.
I hear it goes great on everything. So I think, though, what we want is if you would kindly subscribe to the YouTube channel. If you're on mobile, there's a little bell you can use that to give you an alert. And then forward a video any video to someone who you think would appreciate our content. And then you got to tell them, those stock nerds, it takes about 4 weeks for people to understand our groove. I don't think most people settle into our content right away because we do things very differently. Like on our weekday videos, there are 5 videos that we put out a week.
Red meat.
It's nothing but the charts and what's happening because the old adage, price is truth. Like they're the star of the show. That's how we can tell you direction. Like we're not doing yesterday's content or even that day's content. We're providing you with what we think is going to happen in the future, which sounds ridiculous to say, but it's not about what happened today. It's what happened today that's going to affect tomorrow.
Tomorrow's insights.
And that is a skill set onto itself. And we think we do it quite well. And if once you understand what it is that we're trying to accomplish with our content, we think that our audience grows exponentially, as it has over the years. And so, but we'd love some newer listeners or viewers. And so if you would do us the most kind gesture you can, subscribe to the YouTube channel, forward a video, and leave one comment. And if you do that, and then just say, I did what you guys asked, just send a quick email. I did what you guys asked. We, in turn, will send you this spice rub, which genuinely people do rave about. And so I think that's a fair deal, Danny. What do you think?
I think that's
a
fair deal.
There we go.
I realize now I can't leave on vacation anymore.
That's right. No, nobody can go on vacation on the show.
No, you absolutely can. Oh, I was going to talk.
I don't know what we're going to be doing next time.
That's right.
Give it away.
You'll come back and we'll be sponsored.
Now, you were saying that the daily podcast or the daily videos for tomorrow's insights in the markets, but they're the red meat. Then the question comes to mind: what's this show? Well, the show is a few charts and then kind of potluck, hodgepodge. Right. It's like a box of chocolates. You never know what you're going to get.
Well, yeah. What the show really is an amalgamation of a bunch of the things that we're looking at during the week that help shape opinion, make us curious to want to go screen for idea. Like set up the different screens. Because listen, you can say this is my favorite setup, and a bunch of people on Twitter and YouTube will do this. These are the stocks I'm looking at. Well, how did you arrive at the conclusion? What was the screening process? What were the inputs that got you to that point? Because stockers, I offered you my screen at the beginning of the show. I did that specifically for a reason, because what differentiates us is we pull back the curtain.
Let me tell you why. Like CNBC, I always get these little alerts. Market movers today. Okay, why?
Right, what does that mean for me? Yeah, that's.
And so you can see the components of the screen. And I think the most dangerous thing you can live in is an echo chamber. An echo chamber of your own thoughts oftentimes ends in just oblivion. And so, like Don had a different opinion on the housing stocks. That is a really good thing. It's not that you don't want agreement, and it doesn't have to be.
You always want a devil's advocate, a second opinion.
You want to have healthy input. And so that's what this show offers you. It's not debate on whether the stock goes up or down. It's, will these things that we're talking about result in the result? I don't have a better way to say it. And the thing is, it's a market and anything can happen. But if you know the inputs, like the 10-year, like what's the 10-year yield doing? If you understand how that yield affects stocks like banks and housing, and how it can affect input costs. Like, why would today Chipotle come down? Chipotle's been on an amazing run, right? Yeah, if inflation's going to tick up and inputs are going to go higher,
they can't pass as much of the cost on to the.
There is a
point.
Margins
get squeezed.
There is a point.
And by the way, I'd like to mention one thing about interest rates and kind of the charts. The quote differing of opinion. The housing stocks were on a tear for a little while, then they came under pressure, and it either I could see both arguments. So if rates continue to rise, that will hurt the housing. But if they kind of move sideways a little bit and then ease back off, because it is going to be hard for the Fed to honestly raise rates with all the budgets. So they may be a setup. So it really, right now, what Don is saying is he's watching what the charts are doing, and it may be able to, so it's a breather right now, and it may be able to reignite and move higher if rates don't keep moving up.
Right.
And your point is, if rates keep rising like they're rising, that's, that could be the canary in the coal mine. That could be a big red flag for housing. So those aren't necessarily mutually exclusive. you're kind of in limbo right here with your antenna up, watching what's going on.
So a couple things. So I've got the chart of inflation. So what is inflation? You can see I was highlighting where you can pause the video, take a read. This is on Y charts of what inflation is and how it's measured. And so what I always want, I like Y charts for this reason. They give you what the historical average is. Okay. And I think that provides the listener, the viewer, me context. So U.S. inflation right now is 5.39% compared to just about 5% last month, 65.65% last year. This is higher. So right now, this is higher than the normal 3.22% rate of inflation. We are higher. And if you're going to measure it by basis points, we're
way higher.
Way higher. And so it might not seem like a big deal that 3.22 is the historical norm or the historical average. We're at 5.39. Jay Powell is saying everything's transitory. Everyone's making that joke now. They've been making that joke for a while. I've come to the conclusion maybe a month ago, everything feels like probably a month ago, that labor is not transitory. That Walmart can't go back and pay people less. Home prices are only going to go down if there's some kind of weakness in the economy that causes a glut of housing. There's a 5 million to 6 million deficit of houses right now in America, needed to be built that haven't been built. There's that kind of supply out there. So what would cause things to come down? It's got to be that people are either getting priced out of the market or inflation gets too high, something like that. So what about
rates rise high enough?
Rates rise high enough, right? Exactly. And so Bank of England sees Britain's inflation hitting 4%. Inflation is, let's see here, twice as much as what the Bank of England wants. It's not just here. It's in the developing country, the developed countries as well. One of our biggest trading partners, one of our biggest allies, is having the same kind of issue we're having over here in America.
Well, inflation is only a monetary issue,
but it's
caused by too much printing, and all the central banks, the Bank of England, the ECB, Bank of Japan, the Fed, they've all done the same thing, and they're all realizing the same result.
Well, it's interesting you said that. Policymakers over in the old UK don't feel the need to immediately slow their efforts to stimulate the economy. That and what, to your point, it's the universal Jay Powell playbook. We're all going to say the same thing. None of us are going to differentiate, and if we do, we're going to smack you, and you're going to get back in line.
It's a cartel, yeah.
It is a cartel.
It's a money cartel.
It's an absolute money cartel right now, and so it makes me wonder where's the uncle point, and I wonder if Joe Manchin. That's why I come back to the Joe Manchin tweet. I wonder if we're about to see a policy shift without seeing any kind of policy change. And so, what I think the key to watching next week, stock nerds and market lovers, is the TNX. Watching the TNX and see where it goes, I think, is critical moving forward in the next week's market. Now, look, I said a whole bunch there. Normally, I go to Alex, then I go to Hunter, but I said some things. I said Don would have a chance to rebut, and he should have a chance to talk. Don, do you want to go last, or would you like to go first and rebut or rebuff anything that I was talking about?
I don't care. Doesn't matter.
I'll tell you what. We'll keep the show flow normal then. We'll let Don go last and talk about 21/21, Dirty 30, the whole 9 yards. Hunter, that brings me to you, my friend. What you got?
Hunter Katutis, come on up.
Yeah, I actually.
Did you just combine two people, Dan?
I was teasing
Yes.
because earlier in the show, Don, weren't you paying attention, or you were watching charts?
Yes.
It was Guns Katutis was
Guns
Katutis.
Has Alex flexed yet?
Not yet.
Not yet. No.
We'll wait for a second.
Yeah, that's after he talks about his stocks that he does that.
Yeah. The stock's gonna rock.
Rock the stock.
So I have some counter arguments to your points about are we in for another February? And really, I just want to highlight the difference in where technology and growth are, especially smaller and the broader scope of technology and growth are now versus where they were on February 16th, which is pretty much the peak of growth going back to those brutal days that followed there in the month of February, and then March and April being pretty rough as well. So I export about 1,350 to 1,400 stocks with a bunch of different data every day. So I just curiously, I just went back and I was like, okay, well, what was the average stock in this 1,400 stock universe extended from the 21 EMA on February 16th versus today? So on February 16th, the average stock in that universe was 4% extended from the 21. Today, that is 0.8%. So I think as a whole, it's a lot less euphoric. But then what's even more interesting, or maybe more eye-opening, is Tim, pull up ARKK.
Absolutely.
And I've got a couple of stats here on this as well. So on February 16th, that
Before you do that,
159 high.
Can you just tell people why ARKK, why you're choosing ARKK and the importance of it?
It's the best proxy for measuring the more speculative, high beta, high risk growth stocks out there. Kathy Wood is pretty much, that's her investment thesis, is the most innovative, which just so happens to be also oftentimes the most volatile stocks as well. But that's the reason why I'm looking at this. Is it's a good proxy for growth stocks.
It's a go tech fund.
Yes. So on February 16th, ARKK was 15 or about 14%, 13% above the 50-day, 5% above the 21, and 60% above the 200-day. You fast forward to now, ARKK is less than 3% above all of those moving averages. So less than 3% above the 200, the 50, and the 21. So I'm not saying that means that growth stocks can't fall apart. I'm not saying that means growth stocks are set up to, be explosive and have great leadership moving forward. I'm just saying, for the most part, with the exception of a handful of names, the majority of growth stocks are not extended. And something that I noticed as I've been researching early in the mornings the last couple of days is, Tim, if you pull up, let me think of a really good chart here that illustrates this. Twilio, right? Twilio was one of the better stocks of 2020. It hadn't done as great this year. And what I was noticing is Twilio, so growth stocks rallied before the value stocks did last year, right? So the value stocks, the oil and gas, XME, metals and mining, those types of names, banks, they really started rallying around the end of October, start of November last year. And that rally carried all the way through into May and June. For growth stocks, they really started rallying, obviously, around, like in Twilio's case, right at the beginning of May. And that rally ended in February. So in both scenarios, the rallies for these stocks lasted about 7 to 8, 9 months, give or take a little bit. Growth stocks have just been in a consolidation/digestion phase since pretty much February. Now I know, like, there's NVIDIA and AMD that have broken out, but a lot of them look similar to Twilio. They haven't made new all-time highs. They've been below moving averages. They've got back above. So I would say the vast majority of growth stocks are a lot less extended than they were in February, a lot less euphoric than they were in February. I mean, you can look at IPO ETF is a very similar situation to ARKK. I mean, it's almost, it's pretty much sitting right on the 50, the 21, the 8, and the 200 right here, whereas it was very extended in February. So there are some differences, is all I was going to point out, Tim, is I don't think growth stocks are nearly as bad per se as they were in February at the current moment.
I want to just pause.
I know I just said a lot.
No, let's pause for a second. I think I think an air high five is absolutely in order here. This is a really good freaking show. Like, I'm just, all jokes aside, like, look, stock. I get you under the tent. I say some things to help. Hopefully you're paying attention. What Hunter just did for you there, I think, is incredible.
Put metrics to it.
I don't think you're getting what Hunter just did there anywhere else. Not in this format. And I think I really, and I mean this with all the sincerity of my heart, that was awesome. And I don't want to lose that moment.
All right, follow that, Alex.
No, he's not done. Hunter's not done yet. Jeez, even I know the floor.
I'm not.
I know you're not. Hold on a second.
I'll pass.
Come on. Come on, make me mommy proud.
Hold on. No, Hunter has Jim. I mean, Alex has Jim. Hunter has me mommy. You said make me mommy's already proud. Jeez. Get your people straight, man.
That's right.
I had it straight.
Don has his energy drinks. Hunter has me mommy. Alex has Jim, who used to be good at stuff, according to Alex.
He did say that.
He did. I heard that.
I heard it.
Yeah. So here's the thing. Someone cynical in our audience could also say, we do have some cynical folks in our audience, would say, yeah, they're not as strong because they're weaker and they're going to fall fast. Like you could take the opposite side of what Hunter just presented, but what I think Hunter just presented is absolutely illustrates why echo chambers are dangerous. I think what he illustrated, it's good to have different varieties of thought, and that was really good information. And man, Hunter, that I'd give you a hug or a man candle, whatever that guy's doing. That was really good. What else you got?
Isn't he the guy that breaks kneecaps, or isn't that what he said when he had his first press conference?
Man Campbell he's not going to wipe their butts. He in his first press conference, Dan Cambpell says, I'm not your toilet paper. I'm not going to wipe your butts. Like
that's what I thought. Yeah, he's a character.
Well, you can get the Eagles coach Nick Sirianni, who, by the way, apparently is really good at what he does. I believe the Eagles, after watching a couple Twitter highlights, are going 17-0. His intro, well, that's the irrationality of all Eagles fans across the globe.
It's about to be the Jalen Hurts, Devontae Smith show. I mean,
did you see?
Let's not take a left turn. Keep going, huh?
Jalen Reagor made some amazing
right.
catch yesterday, and we're going 17-0. Just trust me on this. I don't even know who threw the ball to him. Doesn't matter. By the way, can we all laugh about Nick Foles openly petitioning for the job with the Colts? like Nick Foles apparently is third string, and he's just like, screw this. I'm here tearing it up with the third stringers, talking about how great. Anyway, whole nother story.
Go ahead, Hunter.
So interestingly enough, after I just went over all that with growth stocks and ARKK, you can look at IPO or QQJ in the same capacity, just to finish up that thought. But the stocks I'm covering today are steel stocks, home builders, and financials.
Let's do it.
So completely different than the direction I was just in. But I wanted to highlight these because specifically steel stocks, these were some of the first value stocks to start to show strength.
This is a good chart right here.
So really, primarily STLD and NUE, those are your big name, your more commonly traded steel stocks, American stocks. You've also got TX, which is a foreign name that's been just on a monster run. I really don't know what to say about this other than wow. I mean, it's that one has been bucking the trend for quite some time.
It's the Chipotle of steel.
It is apparently. But the point I want to make here about steel is they had a big breakthrough of their moving averages. If you pull up STLD for me, Tim, or NUE, it really doesn't matter. But on 7/29, they had a strong move through their moving averages. For STLD, that equates to getting above the 50, the 21, and the 8, and kind of clearing back above that 60 level, which is important. And since that's happened, they really haven't done anything. And so my only comment is I want to say I wouldn't forget about them or give up on them strictly because they haven't done much after that day. I would watch and see how they act at this point. And so far, STLD has bounced off the 50 and the 21. Nucor, pretty much the same thing. I would just keep your eye on these, specifically these two names, or you could use XME or SLX as an ETF.
These are beautiful.
Both of these.
This STLD,
go ahead, Tim.
STLD is beautiful. This is
look
at this is a 3-day chart you're looking at. This is a setup right here. This is a really good chart. Look at this 4-day chart.
Yep. So we talked about it a little bit this morning on a call, but STLD, Nucor, FCX, even though it's a copper, some of those names were the first to show strength. And in the same way that when growth stocks started to show some strength back in middle February, like pretty much May 15th to May 20th was the bottom for growth stocks. Net or Cloudflare was one of the leaders that really showed strength first and ended up being a leader over the last few months as growth has done well. I would just keep an eye on these stocks as they have shown strength and leadership ahead of most of their peers in the value / inflation expansionary type of plays. Beyond that, DHI and LEN meet the same criteria. They just one of those groups, and specifically two stocks that got back above overhead resistance or moving averages and also had some volume. So DHI reported earnings on the 22nd, had a strong positive reversal, and subsequently got back above all of their moving averages. And LEN back above the 100 level, as Tim just showed you there, and holding on above it. So although LEN, DHI, STLD, NUE haven't really done much over the last 5 or 6 days, like I said, I would not give up on them. I'd see how they act at support. I'd watch for volume to come into those names, just as a way to possibly be ahead of a rotation type environment, because that I mean, the reality is that's what 2021 has been like. And last thing here, Tim, is Goldman Sachs is breaking out today. We have not initiated a position, but GS certainly one of, if not the strongest bank / investment type of name today. Breaking out that 400 level is important to watch. And then you've also got KRE sticking its head above the 50 today, and XLF with a pretty big move above their moving averages today. So just like Tim said, I would watch and see what the 10-year yield does, how do growth stocks react, how do banks react over the coming days. Some of these have moved up into declining overhead moving averages. Some have cleared them. I just see kind of where the strength and the money goes over the next few days after a strong move in rates / bond prices today.
Watch this sensitivity.
That's all I got, Tim. I know that was a long,
no, it was awesome,
long thing there.
Well, look at the sensitivity. So TNX right now on your daily chart. I'm going to take it down to a 5-minute chart. And so I'm doing this live with you. So look at how rates start coming off, and I guarantee you and the Nasdaq finds a little bit of strength and price movement to the upside. They're so sensitive right now, and if rates continue, the sensitivity. This is the relationship to watch. Exactly how Hunter just said it at the end of his segment there. Alex, you're up, brother. What you got, man?
Yeah. So follow up on this week's bonus stock video. The stock that I did go over is going right to the level that I said would be a pretty good risk reward area. So watch that video and you can maybe get yourself into that stock. Remember, measure your risk and have a good, -4 or 5% stop loss from the area. Nothing's ever a guarantee. I'm not perfect. I wish I was, or I'd be a millionaire. The next stock that I think is a potential monster.
Are you not going to mention the stock? Or
no, don't
watch the video.
Make them watch the video.
Yeah, you got to watch the video.
That's a professional right there. That's how you do
so
it.
You'll have to forward that one to Dan too.
No. You got to forward. Ask Tim at revereasset.com and he'll send you the link.
I'll be more than happy to.
So the stock I will go over, if you could pull up Square, please.
Yeah.
And on the daily, we got to get the volume on the bottom. So the volume on those two big bars there, where it was massive, and institutions were stepping in. The interesting thing is, I think it was Monday, right, Hunter, that before the market opened, they pre-released earnings. It was before the date.
Pre-released on,
and so we were
Sunday,
with the acquisition
Sunday. And
Yeah.
so we got caught. I got caught off guard because I had a position, and that wasn't the earnings date. So, but luckily, I had a good, buy point where it wasn't down so much from my cost. But I was underwater at the time. But it bounced off its 21 EMA pretty nicely, and then it ramped up. And then there was 2 days of rest there. You could see next to his arrow, it went sideways. So after that big bar, there was 2 small days, inside days. And then yesterday, another huge volume day and strong to the upside. That's telling me, and it's setting up a nice consolidation here. It's breaking out of a standard. I think that the base buy point is like 282. Maybe it handles up around that area, but this is a stock that you want to have on your watch list. And again, this is educational. We're not telling you to buy. If you want that kind of advice, just email Dan or someone. and we can go over what you can do with your portfolios. But these are the kind of stocks you want to be watching: the stocks with big volume, upward price movement, and very strong fundamentals. One more last thing, and it's not a stock. It's actually I did a little back testing on the last 11 years in the S&P 500 seasonality wise. The month of August has only been up 53% of the time. So just about half of the August since the last 11 years have been positive. The average to range is about plus or minus 3%. So it's relatively a little bit of a more volatile month. I'm not saying it's going to go up. I'm not saying it's going to go down. I'm just saying we could potentially see volatility, and sometimes volatility can go to the upside, which causes wide ranges. So just be careful if you're buying extended stocks. You could get whipsawed pretty quickly. There was another article I found from Vantage Point from the years 1998 to 2017. The average return in the month of August was minus 1%. So it's just something to notice compared to other months. Like January was historically a very strong month, and November, December were strong months as well. So there is patterns, but nothing's ever that black and white. It's just that follow the volatility, not the direction. If that helps. That's
all right,
it. For me.
All right, good stuff. Good stuff. Don, let's see what you're looking at. Any housing night rebuttal from the beginning? Dirty 30.
Yeah,
20 over 21.
I'm not necessarily of the notion that if interest rates are rising, that the housing stocks are going to stop going up. I'm looking at an overlay right now of what the TNX and the ITB were doing from mid-January until mid-April. And while TNX was rising, so was the ITB, which implies that housing stocks were going up too. When we peaked in late April and they started coming down, ITB started forming a base. So what we've seen in both of those cases is housing moving in the same direction as interest rates, which is really not something that I would have expected. When we talked about this in-house several times, why are the home builders coming off when rates are coming down? But and banks formed that basically the same base and acted the same way as the TNX is going up while interest rates went up, formed a base while interest rates were coming off, and then like Goldman Sachs, as Hunter mentioned today, banks having a breakout. So I guess the point is, don't predict that ITB and XHB are automatically going to go down because interest rates are going higher. They don't have an exact correlation.
Okay.
I'd like to jump in real quick on that and make a comment. So when interest rates drop and they bottom out, when they first start to rise, you'll have like a spurt of refinancing activity because the people that were trying to get the bottom or trying to get it down, they'll all of a sudden rush out and refinance. Now, once rates do rise pretty good and then roll back over and go down a second time, you don't see the refinancing as much like you would the first time. That's called refinancing burnout because everybody who's going to refinance, a lot of people have already done it. Well, like Don was saying, when rates first start to rise, small amounts of raise won't necessarily hurt the refinancing or even the home builders because there are going to be a lot of people that were kind of trying to time it right, or they were thinking about building but really hadn't done anything. And all of a sudden, if they see rates start to rise, they'll say, you know what, we got to get this done. We need to do this now before rates rise too much. So smaller moves in rates don't really concern me. It's if we get a move of 2, 3, 4%, a significant rise in interest rates, that's when I really think you're going to see some big changes.
Mm-hmm. Yeah. I don't know if they have. Well, you know what? Everything's conjecture.
Yeah.
That's the whole thing. It's a market, and anything can happen. Just like Josh Allen, the quarterback for the Buffalo Bills.
We're going back to football now.
Just real quick, I just saw come across the transom, Danny. He just signed a contract for $258 million. $150 million,
not bad,
guaranteed. Like, this is NBA money. Is that the highest? What is the highest contract in the NFL? I don't know.
Mahomes is almost half $500 million.
Oh, is it? Okay. Yeah, like the NBA, where that's a player's, like the players have the power, not management or coaches or whatnot. That is a players' league. Those are some massive contracts. And I don't think they have a salary cap in the NBA, do they?
They do.
Oh, they do.
Oh, they do.
Yeah, there's a bunch of
I know
there's a bunch of exceptions built into it though.
Because like they get these lifetime, like these. I forget what they call them, but they're like these. I don't know enough about basketball to know I just know they're massive. This is a huge contract, which is not a player's power league, where the lifespan of a player, they could be cut and
Shorter.
not get
Yeah,
paid.
the owners have more.
Yeah, this is a huge $150 million guaranteed. That's amazing. That is absolutely amazing. I didn't know the Mahomes contract, so that's $250 million. God bless America. Like, where's all that money come from? I mean, it's TV contract. Well, NFL. I mean,
It is. Yep.
Yeah, it's got to be TV contracts, and it's only going to get richer. Like, as Google and Amazon come in, and Apple potentially come in, like that's where the money is.
Depends on what the economy does too. If the economy slows enough, people don't buy as much. Demand goes down.
I don't know.
Demand for everything goes down.
I don't know how Disney, ABC, the whole Disney complex pays for Monday Night Football. Like, their contract is up, and this is the last year, I believe, DirecTV has the Sunday ticket, or it's AT&T has a Sunday ticket, and that thing's going to come up. Like, where are they going to get this money from? Well, actually, DirecTV isn't part of AT&T anymore, or whatever they call it. They sold it. They still call it DirecTV?
Yeah.
Oh, you have it?
I'm just about to cut the cable.
They sold it to private equity. So I guess there's investor money there too.
About a few months ago, I signed up with YouTube TV.
Yep.
Like,
YouTube TV is good. Yeah.
I've got the AT&T, whoever owns it now. It's still called AT&T TV or something. I'm okay with it. Like, we don't really watch much television. Remy likes it.
Yeah, neither do I.
Yeah, like, we have it for a couple things, and then that's it. No, man.
Sports mostly.
What's that?
Sports mostly, right?
Yep.
Yeah,
The Olympics, broadcast sports.
yeah, and like, we don't like I'm lucky if I eat dinner before 9:00 with the kids, and so like, we're not watching TV. But these contracts are only going to get richer. I mean, God bless. Soccer's got some contracts too. But anyway, go ahead, Don. I'm so sorry. Oh,
no problem. So
1 second, Don. I need my Tim Tebow update.
No, keep going, Don. Keep going.
Oh, I want to know, is he still on the team? I'm hoping Tebow makes the
He
team.
is still. We're going to update this weekly. Still on the team, showing some good hands at practice, but at this point, still considered a long shot to make the roster.
No one's been cut, right? Like, when's the first?
No.
This week, or yesterday was the Steelers-Cowboys game. This week marks, like, last week was the last week that there would not be a football game. Now through, I don't know when the Super Bowl is anymore because they added that extra week of football. Now through the Super Bowl, there will always be a football game on television every week. Multiple games.
Which is awesome.
Yeah, I don't know when they do the cuts, like when they start cutting.
It's
players.
Labor Day, around Labor Day. The season starts the week after.
Yeah, like
don't they cut during preseason? During the preseason games, they make cuts too, right?
They used to do it twice, but now they just have one huge cut because they want to protect the stars as much as possible, and deeper rosters allows them to get their game plan in.
I think it's interesting what's happening with Tebow. Like, what an athlete if he's able to hold his own and make the team. He's got the number one selling.
Yeah, especially after being out of it. I mean, he must have been continuing to work out and stay healthy the whole time.
That can only help the Jaguars, right? To have him stay there. He's got the number one selling jersey. I mean, more than Mahomes.
Fans love him.
Yeah, like, that can only
helps the organization, but I don't know if it helps the team, the actual football team. If that makes sense.
Yeah,
it could be a distraction.
All right, what you got, Dom? I'm so sorry. Go ahead.
So the 21/21 list, we got a couple stocks coming off of it this week. The biggest drop is Revolve, which just had a miserable reaction to earnings. RVLV.
That's what it is. Thank you.
So say goodbye to that. But we already talked about Square. That's going to be joining. That's our largest position in-house right now. And based on history of prior leaders, that big move up when they announced that acquisition and earnings, followed by 2 lower volume days of a pullback and then a bust out higher on Thursday, consolidating on lighter volume today. This is acting perfectly from a technical standpoint. So that's definitely going to be joining, and watch the video Friday night to see what else is joining, as well as an update on sectors. Basic materials and financials improved this week, as we've already talked about.
Okay.
So see what's weakening.
Is that what you got?
Yep.
You know what I thought was interesting this week, real quick, Danny? You know what? I'll save it for one last thing. Take us with the normal close, and I'll do one last.
Folks, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. They can sign up for our daily market insight video and this podcast directly in their inbox. We won't spam them or reach out to them anyway. It's up to them to reach out to us for a complimentary portfolio review, any questions or topics they may want talked about. You can email any of us at dan@revereasset.com, Tim at revereasset, Don, Alex, or Hunter at revereasset.com. And you can always call us old school at 855-REAL-WEALTH.
You know, I'm sorry. I was looking at my notes, and I didn't do the whole marker tracing thing that I normally do when you do the normal close. Did anybody call you, by the way, on vacation?
Yeah, I got a few calls.
Because we talked about how people should just call you while you were on vacation. Like, were they specific business calls, or did people just?
I don't know. I didn't answer them. I was on vacation.
Good answer.
I forwarded all the. You didn't know that? I forwarded all the calls to Meryl.
Yeah.
Meryl got all the calls. She got a lot of calls. So you just made life tough for Meryl.
Danny. Well, I wish I would have known that. Danny.
I didn't tell you for a reason.
Danny walks in. This is so Danny. Hey, how's it going, everybody? And he goes, "Hey, Meryl, that apple back there, you could have eaten that while I was gone."
No, I told her. I meant to tell her.
Like, it's such a random thing. Hey, that lonely apple in the back room. You could have had it.
Tim, I actually had it here, and I was meant to tell her to eat it because it would go bad while I was gone. She graciously put it in the refrigerator to keep it cold so it wouldn't go bad. And I saw it in the fridge. I was like,
"Can you clarify the rest of the conversation for me?" Because I thought I heard her say, "But Danny, I don't like apples." And then I heard Danny. I could have swore I heard Danny's response.
Things, Tim.
No, I did not hear this at all. I am almost certain I heard, "But you're a vegetarian." Did I hear that right? Is that how that conversation went?
I was ribbing her.
Oh my God, I can't wait till you go away again and get Meryl in here. And I heard Meryl just reply back. She was exasperated with, "No kidding. I'm no kidding. I'm a vegetarian, but that doesn't mean I like apples." She had to explain how vegetarians might not like certain.
I know that.
Yeah.
I was teasing her. I said, "But you're a vegetarian. You like apples."
That's exactly it. He knows it now.
To be fair, you offer a pice of fruit to a vegetarian. Odds are they're going to take it, right? They're vegetarian.
Yeah.
Like they like
I wish you were
plant-based.
here for this conversation.
Yes.
It was
He
Yosemite.
was sitting right next to
It
me.
was Yosemite Sam offering a vegetarian.
All
a
right,
piece
we
of
ready to
fruit,
wrap up the show?
and he was shocked that this vegetarian did not like the piece. Like, it was beyond. It blew the Stetson off the top of his head. I'm telling you.
Oh.
All right, what do you got, Tim?
I thought it was.
We're about to close up.
Okay, I thought XLU. I thought was interesting. XLU has had a great week all week, and I thought that was interesting. Like the things that you like with Hunter's growth stocks, they're not that bad. I was like, why is XLU moving so much? I couldn't. And usually when XLU moves, that's not typically that great. And so I find that to be something I want to watch this coming week as well. Do the slower movers pick up the pace a little bit?
That's why Don always says, follow the charts. We'll talk to you next week on Your Money.